Mm. The line.
Good afternoon, everyone. I'm Rupali Gaikwad from Kirin Advisors. Welcome to the virtual roadshow of Sotefin Bharat Limited. Today, we will provide a brief overview of the company and its innovative business model. Sotefin Bharat Limited is engaged in the business of providing mechanized and automated parking solutions, delivering comprehensive turnkey services that integrated advanced automated parking technologies with the requisite supporting infrastructure for seamless end-to-end project execution. From the management team, we have Mr. Jignesh Sangvi, Executive Director. Good afternoon and welcome, sir.
Good afternoon. Good afternoon. Hello, everybody. Welcome for this meet. And I introduce Miss Mona Lisa Ghosh, Dr. Mona Lisa Ghosh, as our another executive director on the panel. So we can start.
Sir, from the Choice Capital Advisors Private Limited, we have Ms. Shreya Poddar, Vice President. Good afternoon and welcome, ma'am.
Good afternoon, everyone.
Ms. Madhuri Mandania, Senior Manager. Good afternoon and welcome, ma'am.
Good afternoon. Good afternoon.
Now we will play short corporate video of the company.
Cities are expanding. Urban mobility is evolving. As smart cities and integrated urban infrastructure continue to develop, the need for intelligent space management is becoming increasingly important. Parking infrastructure is emerging as a critical component of urban planning, supporting better traffic flow, optimized land utilization, and modern city development. India's automated parking system market has grown from $586.7 million in calendar year 2021 to $655.2 million in calendar year 2024 and is projected to reach $888.1 million by calendar year 2031. In this evolving landscape, Sotefin Bharat Limited provides mechanized and automated parking solutions designed for urban environments. The company is led by experienced professionals with strong expertise across engineering, infrastructure, and project execution. Arup Chaudhary, Chairman and Managing Director, brings over 25 years of experience in structural engineering, project management, and automated parking solutions.
The cities of tomorrow cannot be built on parking solution of yesterday. At Sotefin Bharat, we are rethinking how urban space are used, combining Swiss precision engineering with latest automation and machine intelligence to create parking infrastructure that is efficient, future-ready, and built to last.
Jignesh Praveen Chandra Sanghavi, Executive Director, brings multidisciplinary experience across construction management, systems management, real estate, and infrastructure development.
In recent years, we have seen in last at least 4 to 5 years, we have seen a massive urbanization taking place in India, especially Tier 2 cities and Tier 3 cities. City of Mumbai, lot of redevelopment is also happening. That requires a huge amount of parking space, and that's how the demand is generated. The only solution right now available with the government is to go with the multi-level car parking systems, automated car parking systems, robotic car parking systems. So we are doing many projects right now. We have completed many projects.
Hello everyone, I am Dr. Mona Lisa Ghosh, Executive Director of the company. Sotefin Bharat's strength has always been its people, engineers, technicians and specialists, who have helped us build over 12,000 parking spaces across 3 countries. As we grow, expanding our manufacturing footprint and our capabilities in India, we are just as invested in growing our people alongside the business. That's the foundation we are building this next chapter of. Thank you.
Sotefin Bharat is engaged in the design, manufacturing, installation, commissioning and maintenance of automated car parking systems. Operating in India with technology support from Sotefin SA Switzerland, the company leverages global engineering expertise and advanced automated parking technologies. Its portfolio includes robotic parking systems for high-capacity developments, puzzle parking systems for compact spaces, tower parking systems for dense urban infrastructure, and stack parking systems for residential applications. In addition to automated parking systems, the company is extending its engineering expertise into adjacent infrastructure segments, including automated bus parking systems and container storage solutions. The company manufactures key structural components at its facility in Bagnan, Howrah, while electromechanical components are sourced from established global suppliers, supporting quality control and efficient project execution. As of June 30th, 2025, the company has completed more than 50 projects and is executing over 30 projects across multiple locations in India and international markets, including the United States and Dubai. Its customer base includes private real estate developers as well as government institutions such as municipal corporations and infrastructure authorities. With increasing urbanization and vehicle density, the demand for structured parking infrastructure is expected to grow significantly. Backed by engineering expertise, technology collaboration, and execution capabilities, Sotefin Bharat Limited continues to develop automated parking solutions for modern urban infrastructure. Sotefin Bharat Limited, engineering intelligent urban mobility.
Thank you for the video. Let's now let's now start with the company presentation. I'll hand over the floor to Mona Lisa ma'am. Over to you, ma'am.
Hello, everyone. Very good afternoon. And thank you here for being what it is today we mention as a new milestone for our company. In a country like India, where every second a car is being added, and we are struggling to park it. At Sotefin Bharat, Sotefin Bharat has spent over a decade building this answer vertically. Today here we want to tell you. Today we are here to tell you why we believe that answer is ready to go to public. Sotefin Bharat was incorporated in 2012 and it's headquartered in Kolkata. We are end-to-end turnkey player. We design, manufacture, install, and maintain automated robotic parking systems, covering the entire value chain ourselves. We have already completed 58 projects, and we are currently executing over 30 more, not just across India, like Delhi, Kolkata, Mumbai, Pune, Varanasi, and Trivandrum, but internationally too, in the United States and in Dubai. We are one of the very few companies in this space to hold CE certification from TUV, which confirms our system meet European standards and quality and safety. That's not a small achievement in a business where trust and safety are everything. Next slide, please. None of this happens in isolation. We operate with the backing of a Swiss promoter, Sotefin SA, a company with 70 years of experience and patented technology dating back to 1959. When they registered their first patent for the Silomat system, that partnership gives us access to technology and Dolly, you will hear about which you will hear very shortly. Next slide, please. Now, if we come to our manufacturing facility, our execution, we don't just build. Our manufacturing facility in Howrah, West Bengal spans over 10,000 square meters with an installed capacity of 4,000 car spaces a year with a headroom to scale about 10,000 car spaces annually. That's the infrastructure that lets us control quality, cost, and delivery timeline end to end, rather than depending on outside vendors. Next slide, please. Now, if we come to the product portfolio, our product range spans from a full spectrum of automated parking. For example, transfer carriages, shuttles, transversing towers, pallet systems, and turning platforms. Now, in revenue terms, our flagship offering, fully automated robotic parking powered by Sotefin SA's proprietary silomat tracker and dolly technology, contributing about 94% of our revenue from operations. Alongside, we also offer a puzzle parking system, tower parking system, and staff parking systems, giving us the flexibility to serve everything from large-scale public infrastructure to compact residential developments. Now, to have a very small or brief idea of how robotic parking actually works, we'll request the team to play a short video on the same. Team, please play the video. Thank you. May I go to the next slide here? See, a business like this is only as strong as the people governing it. Our chairman and managing director, Mr. Arup Chaudhary, brings over 25 years of civil engineering leadership. Our executive directors, Mr. Jignesh Sanghavi and me, Dr. Monalisa Ghosh, bring deep infrastructure, real estate, and HR expertise respectively. And our independent board includes Mr. Durga Shankar Mishra, former Chief Secretary of Uttar Pradesh and Secretary to the Government of India. Mr. Sitaram Kunte, former BMC Commissioner and Principal Advisor to the Chief Minister of Maharashtra. And Mr. Giriraj Garg, former Executive Director at SEBI, who helped to establish NISM. This is a board that understands both engineering execution and public governance, which matters enormously in a business built on government contracts. Next slide, please. Now, if we come to the industry overview for global and India, now many people may think, why this business and why now? So see, globally, the automated parking industry is projected to grow at 12 to 18% compound annual growth rate between 2023 and 2030. In India especially, the market has grown from 587.7 million US dollars in the calendar year 2021 to 655.2 million US dollars in the calendar year 2024, and is expected to reach nearly 88 million US dollars by calendar year 2031. Now, this has been driven by smart city initiatives, rising vehicle ownership, and simply cities running out of ground level space. Next slide. Now, again, if we come to industry overview regarding growth drivers, here there are four factors or four forces which are converging into a favor. Number one is smart city initiatives. Number two is demanding intelligent infrastructure. Number three is automation. And number four is IoT, making these systems more reliable, environmental pressure to cut fuel wasted like searching for parking, and perhaps most simply, Real estate prices making vertical, space efficient parking a necessity rather than just a luxury, especially in the metros. Next slide. This has already been covered. Now we'll come to the company strategies, manufacturing and diversification. Looking ahead, our strategy rests on two pillars. First, the robotic manufacturing localization. We are setting up a dedicated Indian facility for the robotic dolly system, for which we have already secured exclusive rights. This reduces import dependency, improves our margins, and makes us India's only end-to-end automated parking solution providers with complete in-house facilities. Now, second is the technology-driven diversification. We are expanding beyond car parking into automated bus parking and automated storage and retrieval systems for containers using the same core robotics and space optimization expertise. Next slide. Now, regarding the company strategies on partnership and expansion, we have also signed strategic MOUs with MMRDA for automated parking and urban mobility solutions worth approximately $1 billion, and with the government of Karnataka for a proposed investment of 8,500 crores over 5 years under the PPP model. Beyond India, we are targeting the Middle East, Southeast Asia, and North.
I'm really sorry, ma'am. Your voice is not audible.
My, am I audible now?
Yes, ma'am, you are.
Yeah, a phone had come. That is the problem. So we have completed this slide. We have mentioned about the company strategies regarding partnership and expansion. May we go to the next slide, please? And now we come to the order book and our revenue mix. On the numbers that matters today, our closing order book stood at 533.45 crores for the financial year 26, with 73% coming from government bodies and 27% from private developers by order value. In terms of revenue, financial year 26 was roughly 56% government and 43% private. And geographically, Mumbai remains our largest market at about 82%, followed by Delhi at 14%, a footprint we are actively working to diversify. Now, may we go to the next slide? If you come to the financial snapshot, then here is where the entire story really comes together. Our revenue has more than doubled in 3 years, from 56.28 crores in the financial year 24 to 116.75 crores in the financial year 26. Now, regarding the EBITDA margin, we have expanded from 18.73% to 25.86%. Our PAT margins from 11.10% to 14.87%. Return on capital employed improved roughly 27% to over 33%. Our debt equity ratio has stayed below 0.9% through the entire growth phase, meaning this growth has largely been funded efficiently, not through aggressive leverage. Yes, next slide. Okay. We'll come to the object of this particular public issue. Now, this is a fresh issue, and every rupee has a clear purpose. Approximately about 20 crores will fund our new manufacturing facility in Kolkata, about 8 crores for new office premises, and
I am really sorry to interrupt, ma'am. Your voice is not audible.
there is a certain network problem. Even Jignesh Bhai also has to leave. So, can you hear me now?
Yes, ma'am. We can hear you.
Can you hear me? Okay, okay, okay.
Yes.
Thank you. So I'll continue. Now, I had stopped like after the office premises, 40 lakhs, 40 crores for the working capital to support our growing order book, and the balance for general corporate purposes. Like in short, this capital goes directly into capacity. We already need for orders, we already have. Next slide. So
Thank you for
that's
the presentation.
sort of in Bharat. 70 years of, yeah, but I have to conclude the
Yes,
presentation.
yes,
I have not concluded yet.
yes.
Yeah.
Sorry, ma'am. Please go
Thanks,
ahead.
sort of. So that's sort of in Bharat. 70 years of Swiss engineering legacy. Over 12,000 parking spaces already delivered across 3 countries. Revenue that's more than doubled in 3 years, and a clear runway ahead in robotics, manufacturing, automated bus parking, and international expansion. Now, we are not asking anyone to bet on an idea. We are invited to back a business that is already built, already profitable, and already growing. Thank you very much, and we are very happy to have you all.
Thank you for the presentation, Mona Lisa, ma'am. Now we will start with the Q&A
Thank
session.
you.
I request all the participants to post your questions in the comment box. So we have a first question here. How do you plan to reduce your order book execution timeline and reduce working capital cycle? I'm really sorry, sir. Sorry to interrupt, sir. Your voice is not audible.
As far as the, okay, am I audible?
Yes, sir, you asked.
Yes. So as far as the execution cycle is concerned, we have unexecuted order book of around 540 crore rupees to be executed over a period of 2 to 3 years. This is generally the period for any parking system work for the execution, mainly because parking system comes at the end of the project when the entire civil work is constructed, or rather nearing completion, that is 15 months before the occupation of the structure, we come into the play. But the order is finalized on the day one. So this is the order book, what we have, a confirm order book, which we will be executing over a period of next 2 to 3 years. That is as far as the execution cycle is concerned. As far as working capital cycle is concerned, right now it was end of the March, it was around 220 days, which has now been reduced to around 180 days. And going forward, we are looking for it at around 120 to 140 days from October onwards.
Next question, please. We have a next question from Sakshi ma'am. She is asking, what is the desired split of revenue among robotic, puzzle, and tower parking going forward?
I'm sorry, you are not audible.
Yeah.
You are not audible to me.
Am I audible
I
to
heard
you?
the question.
Yes,
I heard
sir.
the question.
Yes, sir. So if you
So
can reply.
basically, right now, out of my total revenue, around 94% is coming from robotic parking system, which is the niche segment as far as the company is concerned, where we hardly have any competition. And the adoption of this technology is growing very rapidly. We also have a revenue from puzzle and tower parking system. But in that space particularly, there are many players in the market. So our focus is mainly on a robotic parking system. Those clients who are repetitive clients or those clients who believe in quality products, they only come to us for puzzle and tower parking, because our products are little expensive in puzzle and tower parking. So right now our focus is robotic parking. Going forward also, the ratio will be around 85% robotic parking and 15% puzzle parking, tower parking, or any other form of parking.
Next question, please. We have a next question from Sakshi ma'am. She is asking, what are the plans to expand the company's geographical presence both domestically and internationally?
So as far as domestic market is concerned, we have a very good presence in the city of Mumbai, city of Delhi. We are doing one project, a unique project in city of Pune, where we are using the public road as an asset and constructing 200 car parks above the road, fully robotic parking system, when while ensuring that the traffic flows below the building. So a unique building we are constructing. We also have a presence in the city of Kolkata. We have a presence in city of Varanasi right now. Trivandrum, we have executed one project. So that way, and we are planning to expand to city of Bangalore right now. That is our next focus area, where a lot of inquiries are getting floated by the government in the public parking space. So wherever the parking is the necessity in all these metro cities, we will try to establish ourselves. But our again, going back, that robotic parking space where we will try to play a role, because that is where our bottom line is secured, that is our PAT margins are secured, and other places puzzle parking, tower parkings are concerned, which is a highly competitive market compared to all other competitive market. So that is where, and internationally we are already executing project in Dubai. So in Dubai, doing Burj Azizi. This is going to be the second tallest tower in the world, and for which 600 car parks we are doing right now in Dubai. And we have already executed 3 projects in North America, also USA. So this is how we are planning to expand. Again, internationally, we are planning to expand in other fields also, like multi-level bus parking and automated storage and retrieval system for containers also. So that is a global demand, and very few players. In fact, in ASRS for containers, we are the only players in the world who is having this particular technology.
Thanks. Next question, please. So we have a next question from Sakshi ma'am. She's asking, can you please throw some light on the related party transactions, particularly with the Sotefin essay?
See, Sotefin SA is basically a parent company, you can call it. It's a part of the family. So there is nothing like related party transaction with Sotefin SA, except for the purchase of robos. So the robos we are buying from Sotefin SA, which is getting manufactured in Switzerland. So that is where we make the payment to Sotefin SA. Otherwise, there is no payment to the Sotefin SA in addition to the purchase of robos. Going forward from January 28, once we complete our phase 2 expansion of the factory, the Indian manufacturing hub will be the global hub for all Sotefin products manufacturing, and 100% it will be made in India. So even that 20% or 30% component what we import today, that will get zero, practically zero at that time from January 28. Other than that, there are no related party transactions.
Next question, please. We have a next question from Sneha ma'am. She's asking, your largest customer contributed nearly 48% of a financial year 2026 revenue. Could you explain your strategy to reduce customer concentration over the next 2 to 3 years?
It is, say, I would put it this way. If you split my order of 540 crore rupees, around 380 crore rupees is from the government, and rest 150 crore rupees is from the private players. In terms of number of orders, the private orders are much more, but the values are less. In government cases, we have less number of orders, but each order maybe is in the range of 100 crores. Now, the project on which I am working right now with the government, maybe 4 projects at present right now, 4 or 5 projects, out of which some projects run very fast in the government department, availability of site and everything, and project is in advanced stage because we have started those projects at least 1.5 years back. So that is why we see the revenue coming from those projects on a higher side. But going forward, it will be, the ratio will be around 65-35 between government and private players. But again, the government is going to invite a lot of new tenders also in the future. So concentration you may see in the government sector also in the future. But that is where the public parking space demand is there today across all the major cities in the country.
Next question, please. What would be the expected split of revenue between one-time revenue and recurring revenue going forward?
So as far as recurring
Sir,
revenue,
just give me a minute. This is a forward-looking statement of revenue bifurcations. I would prefer you give it in I mean, you do not have to give any figures or any percentages.
okay. So revenue is basically one time. Yeah, next question.
We have a next question from Pranjali ma'am. She is asking, with the top 10 customers contributing over 90% of our revenue, where do you see the customer mix settling over the medium term?
Uh, See, the top 10 customers, if you see, basically, out of which major customers are government customers, those are departments, government departments. Like suppose BMC is there. Now, the BMC is a continuous department. So, after completing couple of projects, they are now planning to invite few more projects also by tendering. Then Delhi MCD, they are coming out with the few more departments. So, the departments are going to remain the same, whether it is BMC, MMRDA, MCD, DDA, all these departments are going to, because those are the nodal departments of the government who are going to execute the work. But going forward, what I see is that the revenue from government and the private would be around 65-35%.
Next question, please. What are the competitive advantages of the company compared with the unlisted and international peers?
See, as technology is concerned in the robotic space is there, we are the oldest company in the world. We have 70 years of legacy. And in that particular space, we hardly have any competition except for one player from Germany and one from Korea. Korean is again a Chinese technology, but the German technology is the old technology. But in terms of our comparison with that German company is concerned, we are at least 15 to 20 years ahead in terms of the technological advantages there. So that is what is our advantage in the at the entire global level as far as what technology we are possessing in the robotic space, robotic parking space. And that particular technology is now catching pace at a very rapid growth. And that is what we are seeing a positive development for the company. There are limitations as far as puzzle parking, tower parking, or other forms of parking. Those are pallet-based parking. There are multiple players across the world, and it's a highly competitive market over there. But our still focus would be on a robotic parking, which is a niche segment where we expect a good growth in going forward.
Thank you, Jignesh sir. Next question, please. Could you elaborate on the relationship between Proviron and Sotefin SA?
Provider and Sotefin AC is the same ownership company. So basically, the owner of Sotefin AC is the Provider only. So the international holding, if anything is there, it is done through Proviron Technologies by the owner of the company.
Next question, please. We have a next question from Google, sir. He's asking, does the business have enough pricing power to protect margins during competitive bidding?
Yes, in the robotic space, definitely we have that enough margins and to protect our whatever the bottom line, what we call it. And in fact, it may likely to grow also in the future because we are diversifying into various other new technologies where we will be the only player globally to deliver those kind of technologies in the port sector and in the transport sector.
Next question, please. We have a next question from Sarabjit sir. He's asking, is revenue growth becoming increasingly dependent on few large ticket projects?
I would not call it dependent upon few large ticket projects. You see, the parking is, this entire business comes out of necessity and the maximum necessity public parking space across the globe. So dependent upon large ticket projects, and those projects are mainly basically large ticket projects when you construct a public park, because those are turnkey EPC contracts. Whereas we work for the developer, only we provide the system. So we manufacture, we install, we do operation and maintenance. But in case of a government project or a public parking space, we right from the beginning of the conceptualization till the completion of the operation and maintenance phase, it is all complete our responsibility. So large ticket projects will definitely come from the government sector only, whereas the number of projects will increase from the private players.
Next question, please. We have a next question from Pavneet sir. He's asking, can recurring AMC income become a meaningful earning driver over time?
Yes.
Thank you, sir. Next question, please. We have a next question from Kavita ma'am. She's asking, would losing one key customer materially impact annual earnings?
No, because in government sector, as I said earlier, there are four major clients, That is, one is CPWD, MCD, MMRDA, and BMC. Mumbai and Delhi is concerned. And going forward, we are expecting many works to come for the execution. So at least for next 8 to 10 years, I do not see any loss of any key customer as far as from government is concerned. And as far as private is concerned, the customer, once he executes the work from us, it's a repetitive order. Whenever they are growing their business, we are associated with them for a long term.
Thank you, Jignesh sir. Thank you, Kavita ma'am. Next question, please. We have a next question from Prajwal sir. He's asking, does the current order pipeline provide adequate revenue visibility for the next 12 to 18 months?
It is for at least 24 months to 36 months.
Next question, please. We have a next question from Pradnesh sir. He's asking, if execution of a two large projects gets delayed, how would you cope with the sudden revenue loss in the short term?
That is a very difficult question to answer. If there is a delay in a particular project, probably that cycle or that quarter may get affected, but eventually government projects we have to execute on time. And when government invites the bids, the plots have been identified, everything is done, and then only invite the tender. And those are time-bound projects. But however, for any approval reasons or for any internal matter of the government, if it gets delayed, the delay may be maximum for a period of 6 months to 9 months, not beyond that. That is what we are aware about it. And that is where now our next strategy is to expand into other sectors also, other technological sectors, number one, and also expand our footprint in the private players also. Now, the private players, robotic technology is relatively a new concept, even though we have executed many projects, but there are so many private players and we have to get involved at the planning stage of their projects, real estate developers, what I mean to say. So we have already initiated that process, and gradually going for order book will be again increasing private players and reducing the burden on the government order book. However, whenever that entire order book will get revamped in near future, you will again see a substantial increase from the private developer, but the ratio will be around 65%, 35%. That is what we are expecting.
Next question, please. We have a next question from Mansi ma'am. She's asking, can the existing execution team handle a significantly larger order book without affecting timelines?
Yes, at present we have a sufficient manpower. We have a manpower of 147 people as on date working in the organization. Those are capable to handle the current order book size, number one. And whenever we require to increase that manpower, we keep on updating that particular thing based upon the new order books, the speed at which we have to deliver the project. So considering all these aspects, we then increase the manpower, but currently they are sufficient.
Next question, please. We have a next question from Deepak sir. He's asking, could project delays lead to margin pressure through penalties or higher costs?
There are no penalties because if the project delays, it may get delayed from the client side, not from our side. So as on date, we have not faced any such challenges as far as penalties are concerned. As far as the cost, higher cost, when we say, it is the fluctuation in the currency price, because our as on date 20% is around imported items and 80% is made in India. So the steel item, as far as the made in India is concerned, fabrication entirely, if the steel cost goes high, then the cost goes high, but we have an adequate provision in all our contracts to fluctuation of the currency also and to the escalation to the steel price also. So we have a basic rates mentioned in our all the contracts, with whether it is with the government or whether it is with the private.
Thanks. Next question, please. We have a next question from Herschel sir. He's asking, are milestone-based payments sufficient to support working capital requirements?
Initially, we had little bit of difficulty because being a new technology, adaptation of the new technology, nobody will trust you. So initially the milestones were quite longer, and that's why we had a little bit of an issue of a capital. But again, we had our internal sources also, our banking support is also there. We have a bank facilities, adequate bank facilities, and we executed the project on time. But going forward, working capital cycle is going to be reduced. We have a target to around 120 to 140 days. So that will resolve all our issues. Right now, even as on date, in the month of June, we do not have any issue as far as working capital is concerned. So we have now controlled that very much, and going forward, it will substantially improve.
Next question, please. We have a next question from Kusum ma'am. She's asking, can execution quality be maintained as project sizes continue to increase?
That is our number one priority. So this is a core engineering robotic company. So our number one priority, and it's a Swiss technology, and you know the Swiss people, they are the best in the world as far as the precision tools and equipments are concerned. So we cannot compromise on quality. We can compromise on any other thing, but the quality cannot be compromised. That is our topmost priority, and it will be maintained always. In fact, we are improving project to project cycles. We are finding out our faults also. We have an R&D team also. So that is a continuous process in the organization. And this process is for last 7 decades. It is not something which only India is doing. This is a DNA of a Swiss company. So we have to follow a standard, European standard. And that is why the Indian company holds the TUV Germany certificate as far as the safeties are concerned. So there is no other company in the world who holds this kind of certification. So that is the advantage as far as Sotefin. So that is why we have these certifications.
Thanks, Jignesh sir. Next question, please. We have a question from Rinku ma'am. She's asking, could dependence on a government tenders result in a volatile order inflows?
Uh, to some extent, yes. If suppose I am working with the Maharashtra government, and if there is an election in the Maharashtra government, say in coming 6 months, or in BMC in coming 6 months, so the department is in an election mode. Once the government is established, again it expedites. So sometimes it happens once in a 5 years where these elections are taken place. So once in 5 years, we have this cycle of around 6 months to 9 months cycle where there is a slowdown, but that is across all the sectors where, as far as the government contracts are concerned. As far as the is concerned, we do not see as of now anything that is slowing down in the real estate field, and will continue to grow accordingly. But in government tenders, yes, during election time, there is a slowdown for 6 months.
Next question, please. We have a next question from Gajendra sir. He's asking, your major revenues are from Mumbai region. Why not set up a manufacturing facility in a Mumbai/Maharashtra region?
See, basically my head office is in Calcutta. My chairman and managing director is from Calcutta, Mr. Arup Chaudhary. He's born, brought up, everything is in Calcutta. My entire technical brain is in West Bengal. And that's why we decided, because those team members are primarily responsible for entire manufacturing, operations, the technical inputs and everything. So I cannot shift my entire team of around 60, 70 people to Mumbai and factory over here. Secondly, it is in terms of cost. When it comes to a cost of the production, it is more competitive in West Bengal compared to Mumbai and Maharashtra. And ease of doing business is also very much there in West Bengal compared to whatever perception we have about West Bengal, or we used to have about West Bengal. But we never faced that kind of a problem in West Bengal. So we had all cooperations, complete operations. Our technical input is also from West Bengal. That is why we have a facility in Howrah district in West Bengal.
Next question, please. We have a next question from Sanjay sir. He's asking, can you elaborate on the total capacity post the new manufacturing unit? The new manufacturing facility is operational. How quickly can it reach optimal utilization?
Yeah, so right now we have a phase 1 installed capacity where we are doing 80% made in India production. So that itself has a surplus capacity right now, which is utilized fully. So there, once we start utilizing that capacity fully, our top line is likely to substantially increase. However, as far as the phase 2 is concerned, where from this IPO proceeds, we are going to use some amount of money for the phase 2 expansion. That is mainly for robots manufacturing. So yearly, on an average, the company, including parent company, we manufacture around 120 robots, out of which we are consuming around 20 robots in a year in India. Rest everything is for the export. Now going forward, February 28, the entire export will happen from the Indian factory. So that will substantially increase our revenue also in future, and we will have a good foreign exchange revenue as far as the Indian entity is concerned.
Next question, please. We have a next question from Apeksha ma'am. She is asking if capacity utilization remains below expectations, could fix cost pressure margins?
No, no, no. No, we have that. We have planned that. So currently we are utilizing around 4,000 parking spaces capacity from our plant, which has a capacity of around 8 to 10,000 parking spaces, and still we do not have, because we have incorporated that into our costing whenever we carry out the cost or estimates for every project.
Next question, please. We have a next question from Deepak sir. He's asking why WC days are so high at 221 days.
See, initially what happened when we entered into government sector in a major way in the robotic space, being a new technology, government wanted to get it experienced first. So that is why their milestone payments were substantially stretched. And we accepted that particular condition of the government because we wanted to showcase the tech. We are confident about ourselves, but in India, we have to showcase it first. So that is how our payment cycles were increased. But from this financial year, it has reduced this 221 to around 180 days right now, and eventually it will come down to around 140 days.
Next question, please. We have a next question from Subodh sir. He's asking, is the current manufacturing capacity sufficient for the next growth phase?
So phase 1 and phase 2 together will give us a top line of around 500 to 600 CR going forward. So from current revenue of around 117 CR, we can reach up to 500 to 600 CR. However, for other verticals, expansions, everything in the automated storage and retrieval system for containers and for a multi-level bus parking, we will set up a new unit altogether. Probably that unit may be close to Mumbai city. So that is what is under discussion right now in the management. So one unit we may have it in Maharashtra and one unit in West Bengal.
Thank you, Jignesh sir. Next question, please. We have a next question from Amit sir. He's asking reason for low book to bill ratio as we are having strong order book.
See, every project has its own timeline. So our payments are based on running account bills, what we call it government sector. So once we complete the milestone, then only we can raise the bill. So that is why you see that even though we have a strong order book, the number of cycles of the bills what we raise are always less than what you see in the market. So it's a technology, it's a complete package what we have to deliver to the client. It is not something like we manufacture one part, deliver, and then we take the payment. It is not like that. A substantial portion we get the payment on a pro rata basis on completion of each milestone. So that is the reason.
Next question, please. Installed capacity is 4,000 car spaces versus 10,000 optimum. IPO funds a new 20 crore plant. What capacity does this add and what ramp up justifies it?
See, the new plant, the capacity in terms of number of car parking spaces, it is mainly to manufacture the robots in India. So that will be the biggest achievement as far as the Indian entity is concerned. And India will be the only country who will be manufacturing these robots to be exported to the world. This 20 crore new plant is for the manufacturing of the robots and export it to the world. As far as our existing factory is concerned, it already has a capacity to reach up to 10,000 cars per spaces. So considering that and considering my new factory, we have basically a growth potential to reach around 500 to 600 CR revenue going forward from, we expect that probably from 2030.
Next question, please. Is there any stated plan to progressively localize dolly production? Does localization require Sotefin essays, IP transfer, or consent?
Number one, that is what I said just now. Production is to localize the dolly production only. Dolly is the name of the robo. So when I said that robo production in India, that means dolly production in India. And we have already entered into transfer of technology agreement. So technology is in our possession. And Sotefin says IP or transfer is not required. That is a global patent or IP. So that is not required. And Sotefin SA is also part of the same family. So that is not required.
Next question, please. Can you explain your payment schedules in case of a government and private separately?
See, in private, we generally do manufacturing to installation. So our scope starts there. So there is an advance payment ranging between 3% to 10%, depending upon client and depending upon the project size. So that is when we start the manufacturing. That time it is the payment, major payment starts, and that manufacturing process starts generally occupation of that particular structure by the developer minus 15 months. So on an average 12 to 15 months minus we start manufacturing, and we complete in that 12 to 15 months, including installation and handing over to the clients. Now, whenever it comes to the government side is concerned, it is a total turnkey EPC contract. So what happens, they give us the land and they tell us to design the whole structure. So we are the only company who does the entire work, that is including design, including construction of a building, that is a civil work. Then before that, approvals from various departments, and then thereafter manufacturing, installation, and handing over, and operation and maintenance. So that is why the government payment is linked to the milestones of every stage of completion of the entire process of handing over to the client. Whereas in private, it is mainly starts from manufacturing level. In both the cases, we do get advance payments. In government, generally advance payments is against the bank guarantees. In private, sometimes it is against the bank guarantee or LC, or sometimes it is direct.
Thank you for the insightful information, Jignesh sir. Next question, please. So when Sotefin India manufacturing starts, what will be the revenue split like? Will we be looking at those operations? Will Sotefin India get revenue boost, and by how much? Kindly throw light.
So not required, sir. No future projections to be given. Next
Sure,
question,
ma'am.
please.
Next question, please. Sneha ma'am is saying best wishes, guys.
Thank you very much for your kind wishes.
Gokul sir is saying looking forward to the IPO.
Thank you, thank you,
Thank you,
Sir
sir.
thank
Abjit
you.
sir.
Thank you. Thank you.
I
Thank
think
you.
we have covered majority of the questions. So thank you everyone. Thank you
Thank
Jignesh
you.
sir. Thank you Mona Lisa
Thank you.
ma'am. Thank you Shreya ma'am.
Thank you.
Thank you
Thank
ma'am.
you, team. Thank you. Thank you.
Yes ma'am. And all the best for the IPO.
Thank
Thank
you,
you.
everybody.
Thank you.